Good morning. Good morning. So we are going to go ahead and get started. So I'm going to go ahead and share my screen. So I just wanted to go ahead and come in here, and today starts the day where I'm going to conduct my pre-market analysis for my weekly pre-market analysis. So as of right now, I got my trading plan right in front of me, right? My full-on detailed trading plan, multiple pages right here. So this one, right, coming all the way down to all of the next pages and so forth. Pretty much I created this off of my most recent website that I created. And with this detailed trading plan, you can see, I don't know if you can see it right here, right about here. You can see that it has my pre-market analysis. So with my pre-market analysis, that is going to be pretty much what I wrote on the board as of right here. So therefore, we can kind of go through it in a simple steps. That one has the full details about what I'm looking for, about what, the breakdown of all of this. So right here, my weekly pre-market is going to come down to checking the weekly news events. And then from there, it's going to be multiple time frame, such as market structure, weekly, daily, 4 hour. And then on top of that, we're going to add any support, resistance zones, Fibonacci's, and then trend lines. So any of these additions are only going to be based upon the weekly, daily, or 4 hour. On Sunday, I do not go lower than the 4 hour. As my pre-market, my daily pre-market is slightly different, where I can do the weekly, daily, 4 hour, and then I go to the 2 hour and the 1 hour. So for today, we are not dropping lower than the 4 hour. That's because for two reasons. It's Sunday. It's 5 a.m. on Sunday. Market doesn't open for another like 12 hours, roughly, right? 11 hours, 12 hours, somewhere in that range. So for that reason, I don't go lower than the 4 hour, because all I want to find out is for the week, what direction do I believe we're going to be going in? So in order to actually kickstart this properly, I'm going to switch the screen over to Forex Factory. So if anybody is not familiar with Forex Factory, it's literally Forex Factory right here.com. This is what I pretty much utilize every single day in order to check what news events are coming out, and then on what days and times. This is the only one I really mainly use. Obviously, there's going to be other news events that can occur, that can be pretty immediately. So I don't have all of those. This is just like the ones that I'm familiar with. Anything can happen at any given time with news. But kind of going into here, let's go ahead and look through all of this week to see if there's any major news events that we need to be mindful of this week. So therefore, we can go ahead and notate it, mentally, and then recap it on the day. So this is also a daily recap that I do every single day. But for the weekly, I look for all of the news events for the whole week. So first, we got today, which is Sunday. We have a FOMC speaker speaking at 11:30 a.m. Anything yellow folder, so if you're not familiar with Forex Factory, anything yellow folder wise is going to be a low impact. You can kind of hover over it, low impact expected. So there's a high probability of this not affecting the market too crazy much. Now, if you're trading off of a 5 minute, 1 minute, maybe even 15 minutes, you have to be mindful of news, as it could create a slight ripple during those time frames. If you're trading off of, say, the 1 hour, the 2 hour, 4 hour, low impact news, they're not usually going to affect you too much, if at all. The ones that you would mainly want to be watched out for are orange folders and red folders. So coming into Monday, right, which is going to be tomorrow, we have a lot of yellow folders throughout the day. Okay, so this is Monday all the way down here. And then these are the timestamps of when the news events are expected. And then right here is going to be the currency pair that is based upon the news event. And then this is going to be the news event itself. So for USD, we have PMI. So we want to be mindful for Monday. PMI has a opportunity where it can shift the market. So if I'm not mistaken, gold likes whenever there's PMI and when there's CPI, it really loves CPI. So the gold market can usually shift quite a bit on those kind of news events. So as you can see, we have CPI coming out for EUR, which is European. Um, sorry, the euro. So right here for the USD, we have PMI coming out, which is going to have a high probability of shifting the market. So tomorrow at 9 a.m., be mindful if you're going to be trading the open or if you're going to be trading near the open, be mindful that there's going to be quite a bit of volatility that's going to come in. And this can come in on anything. The S&P 500, it could be you trade. Just be mindful of PMI coming out, and then take your trade with precaution that you could be wicked out, and then it could go in your favor. So that is pretty much on Monday, and then continuing to Tuesday. Tuesday we have an orange folder from the euro. So with the euro, we have CPI. So if you trade forex and you trade euro against, say, the US dollar, or euro against the say Canada CAD, so you would just be you would want to be mindful that this could cause a potential ripple where it can cause some higher volatility throughout the day, because this shows all day events. So I'm not sure the exact time frame as of right now. Now, what I do is I actually edit my subscription right here. This is just my personalized information of how I utilize and how I can use, this Forex Factory to the fullest potential. I add the data release information as an email. You could also add the 1 hour, 10-minute warnings, and 2 hour warnings if you wanted to add them. Right now, for this specific event, it is saying all day. So therefore, the only one that will let me know is going to get data release. So continuing down, AUD. So on AUD, we have CPI, trade AUD. So therefore, this is not too impactful for me. So just continuing down the list on Wednesday, this is where we have the euro with CPI, and then we also have USD. So non-farm employment change, this is going to be a big one. So this one could shift the market very dramatically. So right here, you can see your forecasted and your previous information. So if you click on this little button here, it'll give you the breakdown of the information. And based upon what you can see what the actual amount was, and then what they forecasted, and then the difference. So right here, we were pretty good, right? Right here, we're expected to be lower. We actually came in up, or we were forecasted to be the same, but we actually came in lower, giving this is the previous information here, and this is like the difference in that regard, if I'm not mistaken. Yeah. So right here, we also have October, which is a negative 32, and then we had 52 was forecasted. So you can see how the forecast is getting lower and lower. And then we had a negative balance, we had a positive, and then we have a negative. So we are really off when it comes to this, which is not good in the sense of being consistent, right? When you're thinking about non-farm employment change and these numbers being off by such a large volume, because this is 52,000 forecasted. This is negative 32. That means the difference between 52 and negative 32 is going to be 80, pretty much 80,000 in total. So with that said, that's a huge difference in the change. So whenever you have something like this one where you actually had 42 and you're forecasted 32, that's good, right? Meaning you had more than this one. So I take it how you see it. So this is non-farm employment changes. So you had negative 32. And then, so right here, it kind of shows you like the exact example. So actual greater than forecast is good for the currency. So for example, the 42 over 32 is good for the currency, meaning for USD, if you had the DXY or if you had the UJ, right, the USD versus JPY, that is a good sign that we could become bullish off of USD. For being negative, this is showing that we could be dropping off of the DXY. And then the same thing with UJ because USD is first. This could impact UJ to continue lower. And then just kind of continuing, we have Canada, we have USD again with PMI. So Monday, right, we have a news event that we're worried about. Wednesday, we have another news event that we're worried about, and this is happening at 7 a.m. and then 9 a.m. And then Thursday so far, just kind of looking right here, we have unemployment claims. This one's not as high of an impact news, but it does have some effect, especially on the week that has CPI, and then non-farm roll employment change. It does have some information to kind of go through, and it has a little bit higher impact during this kind of week. But on regular weeks, it doesn't have that much of an impact. And then just continuing down to Friday. Friday, we can see that we have a lot of yellow and quite a bit of red different folders. So coming into here, we have unemployment rate. We have the non-farm employment change as well right here. And then we have the average hourly earnings. So again, Friday is also going to be busy at 7:30 a.m. So totaling everything up, we are having high impact news on Monday, Wednesday, and Friday. So when you're trading, be mindful about those specific days at these specific times. So therefore, we are going to be having higher impact news, which could create volatility, which then could create opportunities to get in and ride the momentum higher or lower, depending on our setup. And then just kind of going into Sunday for the following week. There's nothing on Saturday, and then Sunday is only after the market opens is when news events happen. So we're looking good for holding trades over the weekend. If I had a high impact news of any sort on Saturday or early Sunday for that pair, I might not hold that pair over the weekend. I could close on Friday or I could close on Thursday, just kind of, expecting not to hold it. There's a issue, or if there's a high impact news that occurs on Saturday or Sunday. So that's pretty much what I have here. Let's go ahead and jump right into the pre-market analysis itself and then start breaking down all the information. So pre-market, this is literally what I'm going to be looking for every single item that I trade. So first things first, I'm going to check the weekly news event. So we can check that off. So it's a 3-step, right? High impact news, check. Right now we're in multiple time frame market structure. So I'm going to be looking for weekly, daily, and 4-hour market structure. So very simply put, if anybody doesn't know what market structure is when the market is in a bullish trend. We have higher highs. So this high is breaking this high. And then we have a higher low, which is higher than this low before market continues up. So this would be a bullish trend right here. If anybody isn't familiar with a bearish trend continues lower, making sure that the lows are lower than the most recent high. And then this new lower low is lower than the relevant low as well. So I'm going to show you how I see market structure. So therefore you can kind of get an idea of what's going on. So this is bullish, right? Bullish trend, bearish trend. And then there's also one more, which is consolidation. Consolidation can consist of impulsive move up, right? A pullback, a possibility of market coming up to the high, but then it retraces back down. And then you can see right here, we have higher low, say this plants another higher low, but then we plant a lower high. This shifts, it comes down here, and then now we're just kind of shifting in multiple directions where we're undecided about which direction we're going. The way that I see this, for an example, if you had a bullish trend that was right here, and then it makes this new ultimate high, and then we start doing this. This is how I would see the market, and I can actually do this to get a little more easy clarity. So as we see the market is having a higher low, and then we move to a higher high, higher low, higher high, higher low, and then we have a higher high here. Every single time that we have a higher low to a higher high, I kind of put a little box, right? And with this box is once price makes a new high, this is the high. And then price comes down and it makes a new higher low until the box is then broken, creating a new higher high. This could have been inside consolidation. So this one broke out, so therefore we then move it to the new high and the new higher low. So right here, we have the most recent information, which is this is the higher low, this is the higher high, and if I drag a box to the right, everything to the right is inside the consolidation zone relative to the most recent higher low and the most recent higher high. So this is market structure just kind of bouncing around, being undecided. So then if price decided to, let's just say, price decided to start doing this move where it then broke this low right here, because it moved sideways. And the reason why this is in consolidation is this was an uptrend. This is the most relevant higher low before the most recent high. And until this high is broken right here, or until this low is broken, then at that point, market is just sideways. So when the market breaks this low area and then say it pulls back and makes this new lower high, this has then broken market structure from here, showing a bearish opportunity, and then say it comes in, makes a lower high, and then we start moving in this downtrend direction. So that's a little bit about how I see market structure. If y'all have any questions on it, feel free to drop a comment and just ask me any specific questions, or if I want to go over it. But I'm going to go ahead and get started on market structure for my weekly and then breakdown, and hopefully it makes a little more sense as we're going through it. So on the weekly time frame, I like to try to drag it back a little bit, kind of see where we are, and I like to kind of take everything off the table just so I can look at just price action and market structure. So whenever I'm looking at this market, you can see that it kind of went down right here and then just kind of sideways action. Remember, this is that consolidation. You have a low, you have a high. You broke the high here, but you also, this low was broken here, right? Then we got a higher low, but then we got a lower high from this high, right? So this is where the choppy, consolidation zone that I was just referring to, this is what it kind of looks like. And then we have this major move up, but a major push back down. So at this very moment, if I took out the most recent choppy information and I'm looking at just this move, we have moved down significantly. And then we are currently kind of going sideways with a current push up. So zooming in a little closer, and if we're looking at most recent lows and highs, this would be considered the most recent lower high, because this high is lower than this high up here. So this one, and I'm going to go ahead and get my drawing tool out. So right here, we had price come all the way down to make this new low. And then we had this most recent high that was created after this one. So we continued lower, and then until market structure breaks this low, then it's not considered a new low as of yet. So the market came down, went sideways for 2 bars, and then continued break this lower low. So now this is the most recent lower low. So now we're waiting for a pullback. So we get pulled back up to this new recent high, which is a lower high from this high. Now I have smaller market structures, so I don't want you to get confused. This is weekly market structure that I'm showing you right now. So we come down to try to continue the bearish move. You see how the bearish move is going down, right? But we now get a double bottom right here, and then it gives a bullish move to the upside. So then we are now in a consolidation zone, which hence why I have you have this in a box. We are currently consolidating, meaning price could continue higher or price could then continue lower with the overall moves. So with this said, we are currently in the position where we are currently heading in a down direction. I am anticipating, it's not guaranteed, but I am anticipating that we are going to make a lower high off the weekly time frame and then continue to follow the overall downtrend, just considering how bearish the structure was previously, right? So beyond that, we have the daily time frame. So we have the weekly right here, which is in consolidation. We have the daily structure as well. Daily structure, very simple as well. It's the same concept, just on the daily time frame. So we were in this uptrend with a higher high, higher low, higher high, higher low, higher high, higher low. This was a lower high that was then created. You can mark it if you wanted to, but I see that with it's past information. So by being past information, I'm gonna go ahead and mark this as the most relevant high. And then we have higher low, higher high, and then market broke the most recent higher low right here, and then we created a lower high. Then we came down and made a lower low, came back up, lower high, came back down, made a lower low. We are currently in a pullback right now before continuing possibly the lower low. So we are currently on the daily in a bearish opportunity, but on the weekly we're stuck in a consolidation zone. So you see how these two kind of play side by side. So in this sense, we have kind of conflicting information, right? Is weekly is going sideways, daily is currently heading down, but currently we're in a pullback pulling up. So this is where you're finding your direction. So now that we have this information, we can now drop down to the 4-hour. From the 4-hour, we can look at the most recent information of the last couple of days to see how market structure is looking and if there's any opportunities as well. Typically on the DXY, I never drop down lower than a daily. The only reason why is for the DXY specifically, I'm not looking for trades, I'm only looking for direction. So technically, I would never do this on the DXY. I'm just showing you a quick example as of this moment. So right here, we are at a support resistance zone, which is this one right here. We can see that we had this overall down move on the daily. We had a major pullback up on the off of the daily, and then we had a major push down off of the daily, giving us a new low. And we are currently retracing. So therefore, if we add in a trend line, for example, here, you could say just like kind of touching as many touch points as possible. Doesn't have to be a trend line, it's just a rough estimate. We can see that this trend line is currently coming up. It's still being respected. Like you see how this big push down and then it immediately rejected up. So it's being respected for this trend line. But you can also see this support resistance zone is being respected. You had a rejection here. You had a major rejection with this candlestick. Price came all the way back to the top and couldn't go higher. So you can see that there's momentum on both sides of these higher lows and these highs here. So market structure is looking as if, so there, you have market structure, which is, the overall moves, and then you have price action. Price action is going to be what the candlesticks look like. So I look at both. I look at market structure, and then whenever I'm going into my 4 hour, my 2 hours, my 1 hours, I'm looking at price action for entry. So for this specifically, this is showing me that I have opportunity that price is trying to go higher, as well as it's being rejected to try to go lower. So because of the indecisiveness and due to the 4 hour market structure, let me just kind of show you what the 4 hour market structure looks like. So we have, I know you kind of see all of these lines, and I apologize. So we have, let's just kind of start here. This low, we had this high, then price pulled back to make this, or we had this high right here, which is the high before the most recent low. And then price pulled up, made this high right here, made a higher low, and then price started heading back up. Price headed all the way up here before it came down and made a higher low. And then we're creating a double top, and then we created a new higher low. So right here, this is market structure. So we can see that we're currently starting to kind of consolidate at this very moment. We have this overall move here. This is most relevant higher low, but we did not get a breakout, meaning this higher low here is technically the most relevant higher low to break structure, because this was the most relevant impulsive move breaking a previous high. So if price can break below this low right here and pull back and then continue lower, this would guarantee us in the sense of having the highest probability of continuing lower. If price broke this low here, right, then this higher low could still be respected to continue the overall up move back up here before having some sort of other rejection or move in that regard. So that's pretty much what I see off of the 4 hour. Hopefully that kind of makes sense. And then we're going to go ahead and jump into the next couple of charts, and we're going to make these a little bit quicker and easier. So just want to add in, so therefore we have it, any support resistance zone, Fibonacci's, and trend lines. So we added our previously, so resistance, kind of turning into somewhat support, but not exactly. This support is more down here, but do we have a nice support right at this very area, like this area right here? And then price kind of pulled up, support here, and then now it's kind of turning into resistance again, right? So I'm anticipating, because it already held resistance here, it could hold a nice resistance here as well to continue lower. So support and resistance zones are there. Fibonacci wise, I have a weekly Fibonacci here. You could also add in daily Fibonacci, which is this most recent high to this most recent lower low. And this Fibonacci, I'm just going to extend it over here so you can see it. We are currently in between the 50 and 78. We are pretty much tapping the 78%. So if market closes above the 78, I'm no longer looking for a sell opportunity yet. I would then be looking at the weekly Fibonacci for a sell opportunity up here. So this would be my Fibonacci that I would then add. This is my support resistance zones, and then my trend lines. I already have a downtrend here. I have the current uptrend here, and then that's pretty much all I can do as of right now. So at this very moment, DXY has been a pre-market analysis, and we are completed, so we can check this one off of the list. So simply put, weekly is in a consolidation. The daily move is currently in a downtrend. Right now, the 4 hour is still in an uptrend, showing, not sure about weekly, showing that we have a high probability of continuing a down movement, but the 4 hour shows we are not ready to move down as of this moment. So therefore, we just have to wait for that to occur. So outside of that, let's go ahead and jump into GU. Yeah, we'll do GU, and then we'll do gold next. So therefore, we have it as well. So off of GU, we're on the weekly time frame. We can see, very simply put, weekly time frame, we are overall in this kind of uptrend area, higher high, higher low. higher high, higher low, high. So overall, we're in an uptrend, right? If we're looking at this most recently, we have this higher low, higher high, higher low, right? Kind of like a higher high right here, higher low, higher high. So this is kind of like our weekly uptrend. You can also say this higher low, we didn't get a new technical higher high off of the weekly until this high. So therefore, this is just a major pullback from this overall trend, creating a double top or a double bottom right here. So we can see that we are making higher lows here, higher low, and we have a high here with a lower high here. So therefore, we could come up and tap this area for a lower high again, and then we could continue this overall down move. So this is pretty much what I'm saying is price came up, came down, lower high, lower low. I'm anticipating that we could continue this little area right here where we break out to the high. And this, you can consider this as like a flag-like pattern. You can consider this a consolidation. It just kind of ranges on what your thoughts about how this looks. For me, this is a consolidation. We are currently breaking lows right here. We're respecting highs at this very moment. So we are currently in a down move, but we are also in this bullish uptrend right here with respecting these higher lows. So beyond that, we have made this nice impulsive move up so far. So we will see how price continues. So weekly time frame, let's do the market structure. So we have higher high, higher low. Sorry. On here, we have kind of like a higher high here, higher low, higher high. We have a double bottom that was then formed. We have price coming all the way up here, making this lower high, higher low, lower high. Price then all the way down here, made this higher low, but a lower high from here. And then price came up, made this minor lower high, higher low, and then impulse move up. So weekly structure, you can see consolidation wise, we are kind of all over the place. So no direct sense of direction. Now jumping into the daily time frame. And this is a lot of different support resistance zones that we currently have on the map. I can also take this off, but I'm gonna leave it on for the moment. This is what I anticipated happening right here. You can also see if I have it on here. This one, January 2nd. Yeah, pretty much. I mean, I drew it before then, I'm pretty sure, but all right, it's all good. So right here, we have market structure. So weekly, we're just pushing up currently. So daily wise, these are all the daily candles. So coming into this very closely, we have made a high here, higher low, higher high. We had a major pullback here to create a higher low here still. So we were still kind of in this bearish move. And then price then headed all the way up here to make this new high. So this broke the most recent high. So this is now the new high. Price came all the way down to make a higher low. Then we made a new high, higher low, higher high. And then after this one, we came, so you can see right here where price came down and it kind of made this higher low here. And then it kind of made this double top. Me personally, the way I see market structure is we came down and we just kind of went sideways for a little while in a consolidation zone. And then finally on this candle here, we broke all the way down to respect this higher low. And then we finally came up to break a new high. So if you're looking at market structure and you're looking very closely, you could have said this is a higher low, this is a higher high, this is a break of structure, and then we broke to the high again. You could say that. The way I see it is I'm looking at overall move. We had a higher low, higher high, consolidation zone, around this entire highs and higher lows right here, but we had an overall higher low from this one. And then we broke up, and then we're currently in this retracement at this very moment, and I can delete this area right there. So we are currently pulling back, and then we are rejecting at our support resistance zone, which is right here, which is also aligned with our 61 Fibonacci that I already have drawn on from this most recent higher low to higher high. So from here, we can also see that price action wise. Price action, we are currently having some bearish momentum, some weakening, right? We have really strong bullish structure, sideways action, a little bit of bearish, a little bit more bearish, lots more bearish with a huge bullish rejection. And here we can see that we're kind of like wishy-washy, right? We had some bullish opportunity come in, and then we pulled back down and kind of hitting that as like this doji area. So from this, we could see bullish structure continue and getting all the way to negative 57. That is what I believe is planning to happen based upon my daily market structure. Now we do know, based upon the Fibonacci, is price could still come down to the 78, go up to the negative 27. So even if price comes against us and say stops us out, and then comes down and gets a higher low here with a respect to go higher, we could see this movement still work, but we were just wrong on the entry. So that's an opportunity there. So let's drop down to the 4 hour to see how we're looking. So market structure on the 4 hour. So like I said, up here we had a lot of consolidation zone. So price has moved up for the daily. We are currently in a retracement for the daily. If we are able to, we can add this little trend line kind of forming here. So we have this kind of bearish trend line at this very moment. We have this bullish trend line kind of forming off of these couple of candlesticks, just to give us a little sense of possible direction. Okay? We also have the major bullish trend line right here off of the most recent higher lows that were formed. So this shows us that this is the recent higher low off of the daily. And even if you drew this back a little bit, you should be able to line up somewhat. No, not really. So this one we don't have really that many touches. So if price comes down and then gives us a buy opportunity off of this trend line, then we could look for another buy opportunity as well. So this is all to say, right? Market will do whatever the market wants to do. But this is what we are seeing as of right now. We are seeing two touches to the downside, showing a possibility of price continuing lower. We also see two touches to the upside, showing a possibility of price wanting to go higher. So due to being in this consolidation range, we are in a weekly uptrend. We are in a week uptrend. Right now, we are in a pullback currently. So we're looking for buys. The only thing right here that we're waiting for is the entry opportunity. Now, I saw an entry opportunity off of this candlestick, which is a hammer, 4 hour hammer candle. I entered off of a buy right here, and then my stop loss is right here. So, like I mentioned as well, if price can see it started working out, but unfortunately started to fail. So, with this candle, showed a new opportunity of possible sellers coming back in the market because of the major key level that we are currently located at. So, this key level and this consolidation area could hinder this movement from continuing higher. Not saying it will, but it has a high probability of giving a rejection. So depending on how the market reacts after the open, what I did was price came up, right, gave me where it almost went in my full direction, and then it rejected. So what I did was whenever it rejected even, I cut half my trade, right? Because of the immediate rejection, that's a red flag in my opinion. It goes direction, and due to that reason, I wasn't interested in holding my full position. So that's a little bit about, G and the 4 hour breakdown. And this is all of our stuff, aligned. So we already checked the weekly, um, was it the new weekly news, right? We're checking market structure right now. And just to recap, right? Weekly in the bullish trend, daily in the bullish trend. Hour is currently holding a bullish opportunity with a third touch of this trend line, showing a possible opportunity for another buy, right? So with that said, right, price could still come back and give a higher low here, but at this very moment, we could get an opportunity for a higher low here based upon the 4 hour and then continue higher. But beyond that, we have a 4 hour market structure that is indecisive. So once we get a little bit more clarity upon the 4 hour and then the 2 hour and 1 hour, once the market is then open, we can see if there's an opportunity for a buy. Because as of right now, everything's kind of lining up to get into a nice buy opportunity, and then riding that to the negative 27 Fibonacci. So that's pretty much what I have on GU. And then for today, the last one that I'm going to be going through is going to be gold. So gold is right here, and we're going to take a glance at what's going on. Same stuff. We already checked the news, so we already know what's kind of going on there. And then beyond that, we are also going to see structure. So when you're looking at gold and looking at a weekly time frame, you can see that gold has been in a really nice rally, consolidation zone, rally, kind of came down, respected a higher low, and then came up to make a new high. So from gold, gold loves to repeat itself. So from here, we can see that this market structure here, right, we came up from this high, we made an all-time high here. And then just kind of looking at market structure specifically, we came all the way down to a higher low. Market came up to make this high, but it failed to make a higher high, so we made a lower high. But then we came down, made a higher low. Market then came up, made a double top, kind of lower high here, and then a higher low. And then we came to make a lower high again, and then a higher low. And then we can see that this is a nice consolidation zone, flag pattern style. And then what do we notice right afterwards? We get a massive break all the way up here. So this is literally market structure. This is the most recent higher low before the most recent high. So when we get this nice pullback, we were expecting a pullback to the 50% of this Fibonacci, right? So A, B, C, right? Fibonacci here. And then we have currently started pushing up to that negative 27. We haven't reached that negative 27 as of yet. But as of right now, we're making this nice move. So that's pretty much where we came from, and this is where we are in today. We are in this overall move where we had this, this weekly time frame where we had this high, we had a higher low here. I can kind of turn this off so it looks a little clearer. So we had this overall higher high, we had this higher low, we had a lower high here, and then we had, you can't really see it 100%, but we kind of had this higher low that kind of formed right here, and then we pushed all the way up on a weekly. And now we're currently in a pullback, right? A weekly pullback in that regard. So now we're going to switch over to a daily. On the daily time frame, it looks a little bit more clear, right? We have this overall pullback here, and then we had a lower high, right, based upon this high. So I can draw it out for you. We had a low here, right, lower high up here. We had a lower low here. Then we had a lower high right here. We had a slight bit of a higher high, or sorry, higher low, and then barely made a higher high here, right? And then a higher low, right, higher than this low, and then we had a breakout, right? This massive breakout showed that bullish opportunity is still present in the market, and then we had a pullback to this higher, this recent higher low, and then price came up, right? The reason why I'm not taking this one into effect is because this one kind of wicked above and then slowly kind of just like trailed off, right? And then it had a full breakout. So I just took this market structure and gave this to the most recent higher high that broke out with a little bit more strength. So this broke out, had some more strength, and then we pulled back. So therefore, with this said, we had a major, we had a higher high here, higher low, and then a new higher high here. And then now we are in this major pullback here. And you can see off of these daily timeframes, we are currently wicking at this EMA, showing some weakness for the buyers. So this could show or give an opportunity for some sellers to come in. Right now, we have this overall weekly Fibonacci, which is A, right, B up here, and then C, which is this 50% zone. So I've noticed, and this is just my personalized recommendation about like what I've seen, right? So I've seen gold reject to almost the 50% and then start to buy back up. So based upon the daily price action, I can see that we could be heading back down off of this time frame here. There's no guarantee that we're going to continue lower, but there's a probability, right? At this point, it's kind of like 50-50 because in this overall uptrend, right, we have these wicks to the high showing a bearish structure or bearish price action. So we also broke this relative higher low, right? You can see this relative higher low is lower than this low. So we have bearishness here with price action. We have bearish, what was it? Bearish market structure. Sorry, I blanked on that. A little early in the morning, right? 5:43 in the morning. So beyond that, we had this that was created. I personally liked, if I kind of take all this off, I personally liked how we had this immediate, strong, bearish move, and then we wicked, and then we wicked again, and now we're wicking again. He is showing two things. So it's showing me bearish possibility, but also a lot of weakness in the sellers that were in the market, and we have sellers that are still trying to push the market down, but we have failed to actually push the market lower as of today, right? That's just as of today. So from this move, though, we could continue lower. And if we continue lower, I believe we can come back to this resistance zone, or we could come to the 50 or 61 or 4,200, right, which is a level, and then we could then head higher. So any of those kind of reasons would be an opportunity where we could then head back in the up direction off of a weekly time frame, because the daily time frame is showing that it just broke structure, but it broke structure with weakness. There was no closure as of yet below this higher low, right? So we had weakness here, we had a wick here, and that's it. Now let's see about the 4 hour. So 4 hour wise, we had this was the recent higher low that I already previously drew out. We can see this higher low here, we did not directly close below this higher low. Now, if we're using this as the higher low, then at that point, it low, but this is not the higher low. This is the most relevant higher low before this overall uptrend. So we can see here we're kind of creating a double bottom, right? And price is starting to create this kind of head and shoulder pattern right here, right? Where price then price pulled down, came up, we made a new lower high, we made a new low, we came up, made a double top. This is showing bearish possibility. Price came down and currently making somewhat of a inverted head and shoulder pattern to possibly head back up. But it's only going to be dependent upon the market opens. So if the market opens gaps down right here and then continues down, I'm hey, that's bearish structure. We're going to continue lower. If market goes up and we break this high, we know that this inverted head and shoulders then works, right? Right now, we only have, to be honest, one candle at this very moment showing the bullish opportunity to head higher, which is not really that significant, to be honest. We can see that right here from the past information of price action, we had price come all the way down. We had price right here that, last respected the EMA, broke down, gave a higher low here, and then we pushed and broke this EMA, continuing the higher move. But then immediately after breaking up here, giving this bullish opportunity, we had another bearish action, like price action occur with this double top pushing us back down. So, and this broke back below the EMA. So the only way that we could buy is if we had a market open and it kind of stalls and then shoots above the EMA, giving us this new now higher low from this higher low, which is also higher than this higher low, and then breaking these highs. So only after price can break these highs, gives a higher low, and then higher highs, this would show us the indication that we are looking for buys at this very moment. But at the moment, we don't want to sit here and say we're gonna buy and hope that it goes up. No, like we want to wait for that confirmation. Now, because of this information right here, so let me just kind of out that one. So right here, where price action, whenever I was looking at this for the entry wise, last week I had an entry point where price came down, made this lower high, made this low here, and then it gave me my setup based upon my support resistance, my Fibonacci, all that information, plus the lower time frames. Where right here we had a lower high, but then we got this higher low, and we had a break of this EMA. So I got in off of right around this move, and so therefore my stop loss is right below this higher low. And the only reason why I'm in this move today is because this was the most relevant information, and then we had this rejection here. So once price action or once the market opens, I have to see where the price is currently at, and I need to determine if I need to close half my position, if I need to fully close my position, or am I going to be holding this in the anticipation that we are going to continue higher based upon this price action. Based upon the most relevant price action, more than likely when the market opens, I'm probably going to have to cut half my trade because we were kind of close to break even and we already had a bearish opportunity that occurred before the market closed for the week. Last week was New Year's week, so therefore there was a lot of gaps inside the opening and closing, right? Less volatility, plus coming up. This stop loss might not hold with the news events this week. And what could happen is on the first news event on Monday, we could literally just pull back down to that 4,200 range, get a nice higher low on Tuesday, and then we could be off to the races. And then on Wednesday, the news event spikes us back up, right? So all those kind of reasoning we could do. That's pretty much all I have as of right now for my pre-market analysis. I already had a lot of my support resistance zones already drawn on. I already had quite a bit of my trend lines already drawn on, as well as my Fibonacci is already drawn on. So that is kind of like my pre-market analysis for the week. In the sense of my weekly pre-market, my detailed pre-market to kind of see direction. So kind of recap, DXY, we are currently unsure exactly where the momentum is going to go. So as of this moment, we would have to wait for a little bit more price action to show us if the bearish move will continue or if we're going to break to the high and then pull back further into a weekly pullback. For GU, we are currently in this momentum where we could continue higher, but have the opportunity where the key level is showing a major rejection level at this moment, which could then be transforming us to a bearish move. And if we are in a bearish move, then that means this daily is going to pull back to possibly a trend line in this potential area, which I was already anticipating. I have my Fibonacci here with a B, right, 50% is here around my support resistance zone, which is at the also a mid level, the 1.3275 area. So with all of that, that would then pinpoint where I could get another buy opportunity here on top of my current move that I had an opportunity for. This would possibly give us a weekly pullback, right, giving us major, because right here, this is our weekly, right? We're in a major bullish trend. So therefore, off of the weekly, we would love to see a major pullback to about 50% of the weekly move, or we have a full breakout, in that regard. So that's where I'm at with GU, and possibility for a buy with the opportunity of a major pullback occurring, right? And then beyond that, we have gold, where we're kind of indecisive at this very moment. I'm in the anticipation that we are going to be continuing the items, but I have a 50-50 based upon how I've been trading and how price action is currently looking. We have a 50-50 probability that we could continue lower to get to, say, 4,200 and then buy all the way back up to the negative 27. If, and this is the if, right? You always have to use that if then mentality. If price decides to hold the 4-hour higher low here and hold the 4-hour higher low here and provides a bullish opportunity above the EMA, then at that point, we could start heading back in the other direction. Because if you look at how the EMA is planted, we are currently in a down move here, and now we're kind of sliding up. And we are, if you look at kind of like these dots right here, this area at the very moment is a little bit higher than this most recent swing. So it's only going to continue going up, if the price action continues higher. But yeah, pretty much all I got for today. I love pre-market in the morning. It's the best time for me it kind of helps me keep everything consistent. I can conduct my pre-market analysis between 5 and 6 mornings, and then I work as well currently Monday through Friday. Most of those days I'm working, also working on Saturdays. So beyond that, I like to conduct my pre-market analysis from 5 to 6, and from 6 to 7, I get my kids ready for school, and then from 7 to 8, I'm driving, and then I'm working, around 8 o'clock, all the way until about 6 o'clock, and then, starting to head home. So kind of like my little, like where I'm at as of today. And then just to give y'all an opportunity, if anybody is looking for an opportunity to create a trading plan, like a really detailed trading plan, such as this one, you can actually go to my website, and it should be linked as well in the, I think it's called bio or something like that. I'm going to link it there. It's www.thedragonsnesttrades.com. And then let me just show you a quick example of what it looks like. So therefore you can see for yourself. Where is this one at? So this one right here, you can actually come into here and you can build your trading plan. Check out the website, see if it's an opportunity for you. If you want to go, and purchase, if you want to purchase anything. I also have a free version for 7 days, so don't feel that you have to say buy anything as of today. You can go in and it's 7 day trial. So if you click right here, that actually is for free for 7 days. All you can do is click the start 7-day trials for free, and then you get your AI quote, you get 6 goals. So I know this week specifically, as well as the next couple of weeks, a lot of people are trying to reset, right? Their their yearly goals, right? They want to reset how they're looking for trade, they're looking for opportunities, um, and whether it's personal, whether it's trading goal, anything in that regard. So right here, you can kind of set goals for yourself within your trading career, and then of course you can get a risk management plan tailored to you. So with all of that said, if you want to sign up and get some free information the program on how the AI works, to upgrade to any of these options here, which helps you build and tailor your brand of your trading. So you can build a habit tracker every morning to let you know about your market analysis and all the information above. And then on top of it, also builds in an AI coach. So it's 24/7 accessible. So you can literally go on here and then you can share the opportunity of, you know, you can talk with your AI coach, determine with the coach, based upon what you're feeling and so forth. So I can give you a quick example as well. Let me go ahead and get this done just real quick. Let me see if I can. Sorry about that. So this is a little bit about what's inside of here. So the best trade is the one you don't take when conditions aren't right. So hence our pre-market analysis, right? DXY, confusing. Don't trade, right? Gold, unsure if it wants to go up or down. Don't trade until you know and feel confident about the condition. I don't feel confident today with where gold specifically is at this very moment. I did a day or two ago before the recent double top that occurred. So, but outside of that, we have the hatching program, which is right here, has all of the information. You can come into the goal setting. It's going to ask you a quick question, and then it has a total of 10 questions here. You can ask you to type in your information. You can get AI guidance. So all you do is click this little button here. Based upon the question, it's going to give you some other information to help you guide you through what best options you should do your goals, what information you should be putting into your trading plan. Like it's tailored to the question to help you, and it's tailored also to the information that you provide into the question to guide you to create a better opportunity for yourself. The risk management plan is going to be very simple. So right here, you have kind of like the full breakdown about the account details, risk per trade, right? It has all of this information in here. If you wanted to utilize this, feel free to come in and you can literally complete and save straight to your library. And from here, you can have your library, that's your workbook PDFs, and you can literally download a PDF right here. You just click this goal setting plan right here, and then from here it'll have a pop-up window, and then it will pop up your PDF. There we go. Let me see if I can share this real quick before you can see an example, and then we'll go check out the trading coach too. So this is just like a quick little example. So you can literally print this out right after you create it. And within your 7-day trial, you have access to printing these out even afterwards. So within your 7-day trial, you can enter it, you can set everything up, you can get this printed out, you can save it to your documents, and then you have it for however long you need it for. And it just kind of goes through all the information that you need. And then beyond that, right here, this is the pop-up window, so you can literally just download it from there. And then beyond that, kind of going back to the dashboard, you can continue scrolling down. We have the habit tracker, we have risk calculator, and so forth. So if you wanted to utilize any of this information, feel free to do so. AI coach, you just click them. You want to decide which AI coach we want to talk with. So here's a great example. We had a trading mindset coach recently. I was testing this out with someone else, and this is pretty much what they are having issues with directly, right? So their problem was with over trading, revenge trading, emotional trading, and then inconsistent risk management, sometimes FOMO. So I literally put in exactly word by word what he stated, and then just this is what the trading coach has informed us about, like what we should do in order to work on getting it resolved. If you want to pause the screen and then go ahead and check out literally word by word. I'm just going to go through some basic information. So right here, it's just kind of like looking at your challenges, right? So number one is going to be right here. Very straightforward. Strict enforcement of the consistent prep, consistent performance in your habits. So, for example, me, I'm doing pre-market analysis. I do my weekly pre-market, I do my daily pre-market. That is going to be my enforced consistent prep. If I fail to do a pre-market, I cannot trade that day. Simple. If I fail to do my pre-market, I'm not allowed to trade. I'm not like I can look at the chart. I can't trade. I can look at the charts. I can't trade if I didn't conduct my pre-market analysis that day. So number two, implementing a pre-trade checklist. So every like this website will help you make the trade checklist, like literally word by word. Like if you if you wanted to get a like even if you didn't want to get the program and you wanted to create your own checklist, just have a checklist, right? This is helping you guide you no matter where you are in your journey. If you're day one, day two, week five, 3 months in, 5 years in. I'm personally 5 years in, and I didn't have a trading plan until about a year ago. So like a defined trading plan. And now with my with this that I built, I was able to build my full trading plan, which is really cohesive, really detailed, and has all the information that I need. So therefore, it gives you the full information of what you need. And then number three, mandatory cool down period post loss or roll break. So this is going to be for me. You can read the screen, just kind of pinpoint it. For me specifically, I only started seeing consistency about 3-ish months ago, only when I was conducting my pre-market analysis consistently, right? And then on top of my pre-market analysis consistently, I've realized only whenever I'm trading off the 1 hour or higher time frames is when I don't have too much emotional connections to my trades. I can place a trade and I can allow it to run, for a longer period of time if I'm entering off of the 1 hour. Because if I lose off the 1 hour, it usually takes an hour to 3 hours to lose, if not a day, in order to make a loss happen. Right? So I'm not as quickly impacted. If I'm trading off the 5 minute and there's one little wick and I'm in the position risking say $100 and it wicks me out in like a minute and a half from after I enter, I'm like, oh, I could just re-enter. That was just a wick out, and then boom, I'm like re-entering it up, and then it wicks me out again. Like when I'm using the 1 minute, the 5 minute, the 15 minute, first, I've noticed that I don't have a cooldown period. But whenever I implemented on myself that I'm gonna only utilize the 2 hour and 4 hour for entry candles, and that's it, nothing else. At that point, I started seeing consistency because I'm trying to focus on how many winning trades can I work on over the course of the right, of 1 hour entries or up to 4 hour entries. Because I can do swing trades, then at that point in that opportunity, I can then continue to get better at entering off the 15, entering off of the 30 minute, and even dropping down at some point to the 5 minute, maybe a year from now, maybe 10 years from now. But right now, I just need overall consistency for my future. And for my future self, if I am sticking to the 1 hour, and I am able to become a consistent, profitable trader, that means I got more time for myself, more time for my family, and that means I can spend more time away from the charts versus being at the charts every single day. As of today, I think about one, maybe hours tops per day on the charts. Right? Everything else is just going to be really family oriented, and then just focusing on myself, of course, to try to build everything I'm building. So that's pretty much all I have for today. So, y'all have a good rest.